how much income do you need to buy a home in Raleigh with financing? Well, I don't have access to all the data realtors have. So I looked up online on Google. I saw that Zillow said that, we'll look at my notes. Zillow said that the average home sold, average price was 427, where realtor.com said that the median sold home price was 458. Both different metrics, but let's use 460 to be, pad it up a little bit. So that's just, on the higher end, I guess. And it didn't specify if it was townhomes, condos, single family, and this is the city of Raleigh, not the whole surrounding area. So you will have definitely less expensive homes when you move a little bit out in other parts of the triangle. But let's go with 460 as a purchase price. Now, for credit score to use as a comparison, according to the internet, I believe Experian website, the average credit score with Experian was 716 across everyone. But let's use a 680 FICO because not everyone's got a 700 plus. So 680 FICO, Raleigh, North Carolina, 460,000. Now we're going to go with an FHA loan to compare to. The reason why is FHA is for these credit scores, the pricing is a little bit better than conventional, but also the underwriting guidelines are a little bit looser and they do allow higher income ratios. So you can buy more house than you could with other loan products. Maybe not VA. VA's got their own special thing going, which is a little bit more common sense, but let's just go with FHA because there are more civilians than military borrowers, right? So FHA will allow a 3.5% down payment. All right. So let's get a calculator. 3.5% down is $16,100 is your down payment. Now, FHA will allow your housing payment, and that includes your taxes, your insurance, your HOA, and your mortgage to be 46.99% of your gross income. That's if you're W-2. If you're self-employed, it's a little bit different, more complicated sometimes, but 46.99, which admittedly is pretty dang high. I don't recommend people borrowing that much, and we'll get into other numbers in a second, but that's what they allow. I'm always going to give people what they qualify for and my advice on what they should be spending, but everyone's got their own budgets, and some people have income that they can't use to qualify. It's not qualifying income. So they actually have more income than we use for the loan. Maybe there's a second bar. Maybe there's a spouse that's not on the loan. Maybe there's income like overtime or bonuses that are received, but for whatever reason, we can't count it. Or maybe a second job or side gig or something. Or sometimes it's the other way. Maybe it's some debts they have, which we have to count, like deferred student loans that they aren't paying. And maybe they're in an industry, or maybe they have a loan where that's going to be forgiven at some point, but we still have to count it. So on paper, there's more debt, but it affects their qualifications. So so for them, maybe it's not that big of a deal to borrow at max capacity, but definitely, work your own budget and buy and borrow at your own comfort level. And they'll also allow up to really 56.99% of total debt. So when you add in your car payment, credit cards, student loans, so it's quite a bit. Anyway, 46.99. So we got the purchase price, we got the down payment. Now I'm going to make a couple of assumptions for this price property. I've seen homes with property taxes from the $2,100 to the $3,600. That's $1,000 a year. So I'm going to use, let's see, $3,000 a year for taxes, which is, and if you haven't noticed, my handwriting is absolute worst in the world. $250 a month for taxes, and for insurance, we're going to go with $100 a month for insurance. Now, it's just an estimate. I'm not an insurance agent, but I've definitely seen properties with home insurance in that rate. So the rate I'm showing now would be a 6.249%. Now, the APR for that would be 6.999% APR. And APR is a little higher than the note rate only because it's FHA, and FHA's got to finance mortgage insurance. So that bumps up the APR, although that's the APRs. No one understands it, but it's another way of showing costs. But really what you're paying monthly is based on the 6.249. All right. So based on that rate and based on 460 minus the 16,100, your principal and interest is $2,780 a month. And FHA has a monthly mortgage insurance that is $202 a month. Right? So now you have your principal and interest, you have your mortgage insurance, your taxes, your insurance. So your total, let me just undo that. Your total with all that is $3,302 a month, which is your housing payment. So far, so good, right? So if we were to look at the cap is 46.99%, so divide it by 0.4699, that equals $7,090 a month. Annually, $85,090 a year. So you would need that to qualify at the high end based on current market for an FHA loan property in Raleigh. Now, I said before that they will allow up to the 56.99% for total debt. So with that number, that just leaves an additional $709 available for other things. So if you have a $500 car payment, $200 credit card, $200 student loans, that's going to be more than this. So that means it would just reduce how much you can borrow. So you would either need a less expensive property or a bigger down payment to get that in line. All right. Now, one thing I want to show, like I said before, is affordability. Rule of thumb for monthly budgets is all of your expenses shouldn't be more than 36% of your income, right? So that gives you room for emergencies, savings, living your life, right? So 36% of your income would be housing. So in this scenario, 36%, that comes out to a salary of $111,000 for the year. So you can qualify with $85,000, but with more income, you just have more of a cushion, easier living, less stress. Unless, of course, like I said, there's other income in the household or less debts than what we're qualifying. So there you go. That's just for Raleigh. If you would like to know what you qualify for based on your income, reach out to me. We'll put together a plan, give you some options to show you what you would be able to afford and get qualified for buying a home in any city. Doesn't have to be Raleigh. This is just an example. Thank you so much.